All right. Hey, everybody. Welcome back to another Future Focus where we are living at the intersection of business, technology, and the human experience. I am looking forward to today's conversation as I look forward to all of my conversations, but this one will be particularly fun. We're going to be talking about AI and analytics and what that looks like. So we're going to get into that. But before we do, if you are not subscribed to the Substack, make sure you do that, because if you miss any of this conversation, I write my reflections articles and give the biggest takeaways from it. So you can find those there at a glance, and give it a rating or review if you find it helpful. It always helps me. So with that, I'm going to transition over. I've got Andrew Einhorn, who is the CEO of LevelFields, joining me. And like I said, we're talking AI, we're talking analytics, where it is today, how that's evolving, and where it might be tomorrow. So Andrew, thanks so much for joining me.
Thanks for having me, Christopher. Appreciate it.
Yeah. Well, so I've gotten to know you through this process. We've had a couple chats now leading up to it, but others have not. So a little bit of background into you, your journey. Like, how did you end up, was building an AI analytics company a childhood dream you had when you were playing with your Tonka trunks in the sandbox?
No, hardly. When I was a kid, I wanted to be a judge.
A judge.
A judge.
Okay.
There was a show on TV. I think it was Night Court. It was a comedy that played reruns. I loved it.
I've seen Night Court. That's hilarious. Okay.
Yeah. So I used to run around with a big gavel, just as a little kid.
Oh, like it wasn't just like the little childhood thing where you're like, oh, I want to be a judge, but not, you had a gown and everything, gavel.
Yeah. Played the part.
All right.
Later, changed my mind a bit, thought that I was going to be a doctor because I like science. So I went to school on the premise of that.
So legal and medicine were kind of the two paths you were looking at early on.
There's like the two jobs I knew about. Yeah. You don't realize all the other intricate jobs that are out in the market at that age.
Yeah.
So, then I discovered after many science classes in college, didn't really like being in hospitals, and I didn't like being around blood. So the idea of, kind of
those are two things that are kind of important if you're going to go into the field of medicine.
They were quite limiting. Yeah.
That definitely limits your pathways.
Exactly. Kind of field medicine and not looking at any of the wounds would probably not work as a career. So I had to figure out what to do kind of towards the end of college, and was taking a lot of statistical courses, was doing undergraduate degrees in psychology and biological anthropology, and came out and kind of said, now what? What do I do? Started to have that, quarter life crisis of what do I want to do when I grow up? Yeah. And somebody whispered to me, public health. I said, what's that? And sure enough, found my way into a public health consulting agency. It was like $1 billion a year type company. So they were quite large. Okay. And found out pretty quickly that all the statistical analysis and data work that I did, I loved doing, and also applied to public health. Only they called it epidemiology.
Okay. So you still kind of stayed close-ish to the healthcare space, where it was like, okay, I'm still dealing with the health side, but you found kind of your love of kind of the numbers and the stats behind it. It was where you started gravitating.
Yeah, I gravitated towards it. It was just, I wanted to figure things out. I was trying to figure something out. There was a problem, and they would put it in front of me and say, here, find out how the mercury gets into tuna fish. I said, okay. And so we start doing, modeling, statistical modeling and field sampling. We go down to Biola Alabama, Mobile, Alabama, and take hair samples and do survey research and figure out that the mercury was coming from the offshore oil rigs. Okay. And then we would mathematically figure out the pathway that happened. And so, for those that don't know.
Yeah, data-driven problem solving.
Totally. It was interesting, and did that for several years, then went to graduate school, then was working while in graduate school for a company that's publicly traded called ICF International. They did IPO while I was there, and they contracted for all types of science and engineering technology contracts. So, for example, they would get hired by NASA to build like a metrics program for NASA for their environmental management, or they would get hired to evaluate the impact of a new regulation on the nuclear energy industry to try to figure out how much waste would be generated. I had all kinds of assignments. Some of them were analyzing orbital debris from commercial space transportation. Others, not quite that heady, but had to build.
But it's so funny because there's so much of this stuff that I think probably a lot of your average people wouldn't even be like, wait, there's like people that sit and not only think about, but I think to me, this is the beauty of the diversity of work where you're like, there is so much of this stuff happening where it's like, not only is it just somebody's thinking about that question and the implications, but somebody's got to get pulled in to go, yeah, but how do we actually know? Which really was the role you played, was like, well, we've got to gather data on, and then we got to analyze, and we got to figure out what that means for the potential implications of it.
That's right. And people wanted to know if all the space junk was going to fall on their heads. So we
Yeah.
had to figure that out, and it was an interesting time period because it was like 2005, 2006, right? So SpaceX was sort of recently formed. We're looking at the transformation of the NASA program basically to private sector.
Okay.
But the government needed to regulate everything that was about to happen over the next 20 years. So they do these assessments.
Yeah, because those are big implications when you think about, space used to be a very limited thing, whatever. If that starts going to the commercial consumer market and the private firms, you're like, well, we got to have some sort of regulations on this because there's rockets flying all over the place. We can't have fuselages dropping on people's houses left and right.
Right. Right. And every time they launch, they have to track all the debris to make sure that, there's literally trash floating around Earth in a ring that kind of looks like Saturn's ring. And every time we do a launch, we have to get through that orbital debris without it penetrating any of the rockets or spaceships that we send up there. And so NASA could track a lot of it, but they also need to track like how much there's going to be 10, 20, 30 years from now doing the same
right.
kind of thing.
Yeah, and project on all of that, because I think about my wife used to be a flight attendant, and so I knew a lot of people who did air traffic control type stuff. And I guess in some ways that's kind of where you're like, well, we got to know what's going up, what's coming down, what's up there. How do we make sure we're not colliding with stuff? It's very complicated stuff.
It is, and in the smallest amount of like unburned fuel can turn into basically a bullet going at 30,000 miles an hour. And they can rip open, any kind of spacecraft. So it's a big deal. So, it did a lot of that. It was a lot of statistical modeling. And then my last assignment was to build actually a technology system for the Defense Department.
Okay.
And they were doing kind of risk analysis for different threats facing the bases around the world, mostly environmental, occupational safety type of threats.
Okay.
And if you think about it, you've got like, these are facilities that they're conducting weapons experiments. So they're blowing rockets up in the middle of the desert, and they have to strap like a 30-foot Scud missile down, light it up, fill it with a gas to mirror what it would be like if there was actually a chemical weapon in it, put a laser on it, blow it up, and then measure the plume. So there's a lot that can go wrong. Just
and there's a lot of implications on doing that. You can't just be like, oh, we'll just do that. I'm sure it'll be fine. You want to know what you're dealing with and predict that ahead of time so you can mitigate the risks.
Exactly. And legally you're obligated to do that. And so sort of the guy they would call to figure out what could go wrong. And,
so we're about to blow up this thing.
Yeah. Mr. Doom and Gloom, they called me.
Yeah. Andrew, what might happen if this goes sideways? And what is the risk that it will go sideways?
Right. And it could be, well, the missile's pointed at the town. So you might want to point it at, a different place in case it comes loose.
Yeah. Let's maybe aim it this direction and maybe use the high tension straps, not the duct tape.
Right. Don't use the Post-it notes to keep it in place. That glue doesn't work well.
Okay.
And
now I have to imagine. And at that point, we'll actually finish how that then led to kind of the continued journey. But then I actually want to go back and ask some questions about that.
Sure. So that was a 2.5-year project to build a software system effectively to take all these threats, all these events that were happening and kind of find a way to analyze them mathematically to see, okay, here are the highest level threats, here are the low level threats. Let's prioritize based upon the numbers And effectively, it was like an event and risk management system. But there was no off-the-shelf software at the time that met this particular
You mean
need.
there's not an off-the-shelf like platform you can buy for analyzing the impact of detonating missiles in the middle of? No, that's crazy. I would have
I
thought,
know, it was nuts.
I would have thought Salesforce or Amazon would have come up with it by then.
You would think, but no, yeah, it was a unique market. So we
Okay.
customized the software, which is to say, there was kind of a basic database as a service off the shelf, and then we gave all the specifications to build it out and kind of redesign the user interface, and spent a lot of money doing it. But it's the Pentagon, so they had plenty, and I loved it. I just fell in love with the process of building something, and I had
Okay.
never done that before. I was
Yeah, because now
you
you
know,
were combining not only the work of the data analytics and analysis, but now it's like, well, now I'm actually building a system that helps make that more efficient.
That's right. Yeah, and I, was never really a builder before. I got like a B minus in, wood shop in school, and I just
Making an
couldn't.
Adirondack chair,
It was more like
whatever you do.
making like a whale that ended up looking more like a goldfish,
Yeah.
but things like that I couldn't do. But software I could do because
Okay.
physically I didn't have to do anything. I just had to lay it out, and I love that because you sort of shape
Okay.
an outcome and solve a problem with it. And that gave me kind of the experience of, okay, from the beginning to the end, I just built a software system. I can do this for all these other ideas that I've floating around. And so about a year later, I started my own company, which effectively was using social media and news data to do kind of reputation management, event
Okay.
management software. The early idea was to make it about policy. So we were kind of analyzing what people were saying about different government programs and trying to give that feedback to the different program that was running it, with the idea
Okay.
that normally, what we saw in agencies was you'd get a political appointee would come into an agency, or there'd be a 2-3 star general that gets appointed, and they just do what they want to do. They're not really asking the public what kind of tasks should they be doing that's going to help. They just kind of do it on a gut. And I thought that was a bad way to address policy. So with kind of Twitter and Facebook kind of burgeoning at the time, we saw like this huge. I looked at that and I was like, this is the largest data set of public opinion that's ever been created. We need to mine and analyze it for information,
Okay.
and then report back to government so that they could be, improve government.
Making informed decisions. Right.
Making informed, data-driven decisions based upon what we as the citizens paying for all of these services actually wanted.
Well, and also to your point of risk mitigation, especially in a digital social media world, maybe in the past you could have got away with going, well, I'm just going to do what makes sense to me. And most people never would have known about it. Or even if some people found out and didn't like it, the impact they would have is small. Nowadays, you make a flub like that and the whole world can blow it up real quick. So understanding that risk, the stakes are much higher. And so I can see where people would start going, hey, maybe we should change the way we decide some of this stuff.
Yeah, that was the goal. Found out the hard way, the government is very slow to change. And if they don't have a requirement to purchase something, it's
Yeah.
very difficult to sell it to them. So you could have the cure for cancer, but if they have no requirement to buy the cure for cancer, you can't actually sell it to them, which makes it hugely frustrating as an
Okay.
entrepreneur. And it was super slow moving. So we ended up pivoting into the private sector,
Okay.
and said, we can do the same thing for publicly traded companies that are interested in managing and monitoring their reputation, understanding kind of events that might happen to, think very, very large companies like 100,000 plus employees. Those who are at the top, at the executive level, don't really know what's going on across the whole company.
No, they don't.
And often that is something as simple as like, hey, did you know one of your vehicles was in a huge accident? They're like, I have no idea. It's because they just can't track that volume of information.
Yep.
So we designed a software system to be able to do that, to be able to, somebody was sitting in their backyard and a train, hopped off the tracks and ended up in their swimming pool, and they snapped a photo of it and put it on Twitter. We would get that and we would relay it to the company and say,
Okay.
Houston,
Or
you have
say if like an airplane was up in the air and a door ripped off and
right.
flew out, and say something like that hypothetically were to happen,
Hypothetically,
what
yes.
what might that do to your reputation as an organization?
Exactly, exactly. And it could be, we had like Discover Card was a client, and Exxon and CSX, the very, very large corporations that, sometimes it was their fault, sometimes it was not their fault, but stuff good and bad was always happening to them.
Yeah.
The trains were hopping
And
off the
oftentimes
track.
with reputation, especially at scale, doesn't really matter whether it was your fault or not. It's just how it's perceived or the way it gets floated.
And that was the service that we provided, gave them the chance to sort of craft that message before the
Yeah.
message was crafted for
Yeah.
them,
Before it got
right?
out
To
of
get out
hand on its
ahead of it.
own.
Yeah, before it got a life of its own. So you let them craft the narrative that, well, yeah, the train left the tracks, but it was because, our client overloaded that particular car. We told them they could only do 16 tons. They put 26 tons. So we couldn't make the turn. And we didn't know because we don't weigh those things. So, they can get craft. And so when we started to look at that over time, we did this for 10 years. So we grew the company from a napkin sketch to ultimately selling it 10 years later to a multi-billion-dollar private equity firm that bought it up. But in between, we had all these clients, probably 100 publicly traded companies, and events happening constantly. And we would see the impact of those events on the share price of the stock, go up, go down. And if we did our job well, they could save billions in market cap just by getting the narrative right.
Yeah.
So the stock didn't sell off. At some point, sort of had internal conversations like, hey, maybe we should be, on the other side of this, on the investing side, because it was starting to get pretty predictable.
Yeah, because not only does it affect their reputation, but it actually affects their share price.
Mm-hmm. Yeah. So you would see an event like a cybersecurity hack would happen, right?
Like, say, a big telephone company had a data breach.
That's right.
And everybody in the company's phone number was released in that breach. Something like that could happen.
Something like that happens all the time. And then it's like, okay, well, what's the liability? You see the share price tank, and then later it
rebounds.
Everybody gets your free $19.99 subscription to go monitor your credit for the next 30 years. And everything's good. Yep. So we would watch the way that happened. And then we had somebody who is at a hedge fund, who was just a friend of a friend, came in and was like, you guys are like crushing it with what you do, and you're getting peanuts for it. You're working in completely the wrong industry. You're working for comms people. Comms people don't have any money. You should be in financial services. And we're like, maybe, let me think about it.
Okay. Yeah. Cause in the initial stages, you're working, like with the PR media side of a corporation that often is, again, strapped for cash. They're struggling with some of this stuff. You're trying to pitch to a board of executives like, hey, we could potentially save millions of dollars or whatever, but it's an uphill battle.
Oh yeah, because it's the budget fight internally.
Yep.
And
that's a good idea, but we're good until something happens.
and then they put it in place. Yeah, if something horrible happens. And we got a few large contracts from bigger companies that understood they had been through the ringer.
Yeah. They'd been taken to the cleaners and were like, we don't want to do that again.
Yeah. And those were great. But, in this conversation with who was a portfolio manager for, at the time, a $65 billion hedge fund, it was like, well, just, help me understand how you do what you do. Because he was like, how do you find information so fast? How do you validate the information so fast? And that was kind of the goal of everybody who was trading stocks and financial services. So I'm like, all right, well, I'll teach you that methodology if you kind of give me the inside scoop on like, how does a hedge fund run? Like,
yeah, right. How do these big hedge funds make decisions on trades and buy, sell, when do they do it? All this other stuff.
Right. So I went and spent like weeks just kind of hanging out, sort of like half intern, half investigative reporter at this hedge fund, just interviewing people and asking them like, what do they do all day? And what are they looking at? How do they make decisions? And roughly found that most of them were just sitting on like a Bloomberg terminal looking at news all day. When they saw something, they would react to it. Sometimes they would trade it. Sometimes they would investigate further. No one really talked to each other. It was very quiet, seeing like 200 people just monitoring their different
Staring at a
areas,
screen.
staring at a screen, some chomping on Nicorette gum. And just sitting there like, okay, I think there's probably a better way to do this with some better software, but who am I? I'm just a new guy.
Right.
And so I kept
And you've
asking.
been around the block enough to know there's lots of things where people might look at something and go, this is ridiculous. You shouldn't do it this way, in your head. But you're like, well, maybe there is something to it.
Well, and one place we went to, which was a big bank that had a trading floor, and walked in, and I heard somebody speaking, like reading tweets one at a time from a box that was sitting there. And it was literally someone just reading from a Twitter account, like news that was coming out. And it was like, tweet from Bloomberg, 2 million people crossed the border this morning into southern Mexico. Like, tweet from blah, blah. And I'm like, what is that? Why don't you go on Twitter and just read it yourself? And they're like, well, we're not allowed to. I'm like, what do you mean? Like, we're not allowed to go on Twitter. It's illegal. It's a liability issue because they're worried about market manipulation. So there's all these little like interesting nuances of things they couldn't do in the space. And we started to put our mind to like, maybe there's something here, that we could use our software to do. But it ultimately, when we did the business plan, we looked at it and said, this is really expensive. It's a total pivot of the whole business. We have all these clients. We're already like over allocated as is. We talked to the board. The board was like, well, you're going to have to raise a bunch of money. That's going to dilute us all. What if we just sold the company? And it became that conversation. So we ended up exiting and selling the company, kept the technical team. And, after kind of a few months of a break, started to think like, okay, now what do we do for like act 2? Like, what's the next company?
Yeah.
Right. And we knew the shortcomings of the things that we had done over the last 10 years, which is like very Boolean search. So keyword based results. And, you put your information into a Google search, you get a lot of false positives.
Yeah.
Right. It's the same with this kind of monitoring, except like to another degree because of acronyms and just people saying weird stuff on social media and the news. So we started to say, all right, we need AI. We need better linguistic algorithms. We need context. We need to understand like what the person is trying to say. We need to understand sarcasm. So trying to address all those without necessarily.
So you're not making a $500 million trade on a sarcastic Reddit post or, something like that.
Right. Yeah. You don't want to read an Onion story and then trade on it like it's real news. So you're trying to solve for some of that. And then other things that are just small, like, is it a bluebird that flies in the sky, or is it Bluebird Bio that makes medicines for people? Those are different things. And the context of like the copy around it kind of gives the clue of like, hey, we're talking about finance, not nature. This is not National Geographic. Like,
and I'm just even thinking about this, but even when you think about like the examples you were giving of what you were observing with the traders, the brokers, they're looking at it one at a time, as fast as a tweet can be read versus AI, which can look at thousands, millions of data points at once to then go again. I'm just even thinking identifying Bluebird. Well, okay, are there other things talking about this thing, or is this just some random retiree, sitting on the side of a bench talking about what they just observed?
Right. And you have to do all that quickly and automatically. And there's a lot of other things like here, there's a rocket company called Astra out of Houston. Astra is shorthand for AstraZeneca in the UK.
Yep.
Totally different companies. But in the UK news, they'll refer to it often as Astra. And here in the US, Astra is the rocket company, if they're still around. I haven't looked in the last 6 months. They weren't doing well. But they had been based in Texas. So things like that, you really have to.
It can pick up on the contextual cues.
And then, ultimately what we had figured out was like the experience of walking around these big places and seeing how many bodies they had devoted to trading versus what an average individual is capable of monitoring on their own, a self-directed investor. There was just this massive resource gap. I mean, you had 200 people in a room, each with a $30,000 a year Bloomberg terminal. And that was sort of one way to figure out how to trade and have an edge in the market against like your average person like you or I, were just sitting there, watching the news, looking at some feeds, trying to figure out what stocks to pick. And it was just astronomical, how big that gap was in resources. And so we looked at that and said, you know what, this system and this AI can really fill that gap where one person can then have the capability of 200 to monitor so many different equities automatically without doing any real heavy lifting, and to sort through information and the millions of documents a year that come through. And so that became the mission. It was like, we need to level the playing field between the large asset managers and the individual investor, because it's not fair right now. There's too much capability. It's only going to get worse. It's just going to lead to.
So would you say you were trying to level the playing field?
That's right. We were leveling the playing field, hence the name. And as we're sitting around for a name, we're like, about LevelFields. Like, no, this has to be taken. Look it up on GoDaddy. No, it's available. Let's buy it. So we hit that at the brand, and that's ultimately the goal. It's like, if you ask an average person how many stocks can you name, they'll probably name 15, maybe 30. Very few can go above that. But we track 6,000 stocks on the application. And so what that shows you is like, everybody hears about the stocks the media is pushing, NVIDIAs, the Apples, Microsofts, and so forth, because that's what drives clicks and ultimately drives ad revenue. So they keep talking about the same stocks, which makes everybody overcommit to the same stocks and ignore the 99
real opportunities
of the rest of the market. Right. That are maybe undervalued, cheaper stocks, easier to get into, less risky, less volatile. So we wanted to introduce people to that, have that capability to look at those other equities that are, there's a lot of really cool companies out there that nobody's ever heard of that are just struggling, to get investors in the door, even though the company itself is doing well.
Well, and what's interesting about that I also like with the mission, because I think, part of that mission that you described, which I think is super cool, is not only one, that you're trying to make the individual investor be more effective at this. But I also think, when I think about the big brokers, in many ways, the job you described, and I think about a lot of things through the lens of what work is like. And I'm always trying to make work better for people. And the job you just described sounds horrible. Like, it literally sounds horrible when you really think about what the job is. Like, literally sitting, staring, scanning things all day, which is a very robotic task. And that's not fun for any human being, regardless of you. I'm sure there's plenty of those brokers who got into the stocks because I love this, or I like, and they're like, this is what I do. I sit here and listen to someone read tweets and scroll through a Bloomberg terminal all day long. And maybe I can put up with it because I'm able to make enough money to, drive a Lamborghini or whatever, but it's still a pretty miserable existence. So not only does this potentially make it better for the average day person who's like, I don't know, I would like to trade, or I trade, but I'm only trading Apple or NVIDIA or Microsoft because those are the only ones that come to mind, or maybe Puma or something like that if I'm a sports person, but I don't know the rest of this stuff. So you're creating more opportunity for that. You're improving the job of others. But then I also think of the economic impact of what this can have, because to your point, there are lots of these small startup companies who need investors, who actually have a much lower risk profile when you really think about it, are much easier to get into, and actually can net a much better return. So it's like a win-win-win-win around the board when I'm actually thinking about it. It's not like, oh, it's Robin Hood, rob from the rich to feed the poor. It's like, well, no, actually everybody in the game can potentially win.
And that's how we look at it, right? It's just saying, we as humans can't possibly process the volume of information that's being put out there. 6,000 stocks, 2.3 million documents on those stocks come out there every year. Our system's reading 30,000 documents a minute. There's no way a person can come anywhere close to that. and is just looking
No.
for things that are proven to move the share price, that are material, which is the other big piece. And that kind of, brings in the last 10 years of our experience. Was there's news that matters, and there's most news. And most news is like, it's either the day 2 story of what it was already said, where already took place, or the day 3 story, or it's an opinion piece, which doesn't matter, doesn't change, your investment thesis much. Or it's just, rumor kind of garbage and clickbait.
Yeah.
You see that. You look at these feeds like, oh, these stocks could be bigger than Amazon by 23x. And you're like, no, they won't. And even if they might be, you don't know that they will be. So stop
Right.
talking.
It's purely a speculation, which nobody who's a seasoned trader goes, hey, you know what we should do? Let's bet the farm on this what if situation.
Right. And then, so what ends up happening is it's like people get suckered into these headlines that are salacious and sound great, just to be sucked into a newsletter subscription service that doesn't deliver, because it overpromises and it's BS and it's all opinion driven. And you have a lot of that in the market, and it just gets saturated. And then people kind of get tired of it, and then they give up and they're like, screw it, I'll just buy Apple, Microsoft, because I don't know what to do.
Yeah.
So, we looked at that as if we need a different solution. And largely the information in the financial space comes from the companies. They're not breaking news stories from investigative reporting very often. So it's either a government press release or it's coming straight from the companies. It's very rare that there's a news story that originates from the newsroom. Most of the time they're just reacting to releases that they get from the company, and then they might ask some probing questions to get, additional details. But the company's releasing this. So we looked at that and said, well, why don't we just get the data firsthand from the company, relay it to people? Then you don't need this sort of middle group of, reporters,
Of
bloggers.
noise. I mean, honestly, when you're thinking about when it comes to making trades, the noise is just really truly noise that's a distraction from. We just need to get to the source of, hey, here's the information that actually determines what's going to happen. And again, to the average user, they don't know how to cut through that noise. And even as a seasoned person, that's just a lot of noise to sit and cut through. So trying to hit it, maybe you're hitting the target more often than whoever doesn't have that experience, but you're still, it's a bad game. The house is going to win.
I'll give you a real concrete example, because I think it will help walk through it. So home builders, right? These are companies that build new homes. They sell homes directly. They, as a group, and these are like, PHM and Taylor Morrison and things like that, they've been crushing it absolutely over the last couple of years. And you can tell by their revenues going up, their earnings are going up. They're giving a lot of money back to shareholders in the form of dividends and buybacks. But the narrative has been, they're not doing well because no one's buying homes, because no one's moving, which is completely incorrect. No one's moving out of their existing home that they have a mortgage in.
Yeah.
The people that don't have mortgages still need to go to another city, get a job, have a house.
Yeah, people are still getting new jobs at new companies. Life is still moving on.
Exactly. And the difference is you can't really buy a house from somebody else right now because there's so little supply, because nobody's moving. But if you build a house and you're the builder, you can not only sell the house to a person looking for a house, but you can set the mortgage rate.
Yeah.
And you can set a mortgage rate for 5.5% when the national average is, 7 to 8.5%. So then you give them a break. So you have kind of the only game in town on supply, and you're giving a discount. And all the numbers say you're going to be doing well. And yet, if you look at like the stock graph, these stocks all sold off over the last 3 months, and they were down like 20, 30% on just the sentiment that the real estate market in general was bad. And we had our system kind of looking at the data sets and flagging these stocks as buys because all the signs were pointing to positives, like they're giving their stock back, they're doing dividends. And so what happened yesterday, some of these stocks, they came back like 10% in a day, when all of a sudden there was a belief that, the rates are going to get cut in September. It's going to loosen up the real estate market. Trump's going to be president, things are going to be easier. And then all of a sudden, boom, this company goes from $106 a share to $124 a share in like 2 or 3 days.
Okay.
And that just kind of illustrates the difference between actual data and market sentiment.
Okay.
And eventually the sentiment will shift towards reality, but for a while it stays away from reality. And if you can kind of navigate through that with good data and good intelligence and a good system, you can largely never put on your TV again.
Okay.
Never have to listen to anybody.
So I want to talk about some of the technical journey that this is, because you've illustrated this really well. And I think even unpacking some of this, I still see a lot of cognitive misunderstandings about what AI is and how it works. And so that's where it's similar to, that's why I continue doing the show that I do, is with the whole technology trends, a lot of people are dealing with the same stuff you just described when it comes to trading. There's all this noise about all this stuff that can leave you either terrified or just ignorant or overwhelmed or whatever. And being able to cut through that, where does it make sense? And I guess some of it is, how have you navigated that really well? I mean, it sounds like your experience has also played largely into that. But as you've looked at this and decided, like, hey, where does the AI play really well? And where do we, because I could see a world where somebody could see the same things you've seen, hear the same things, and try and take a shortcut and create something that has people losing their life savings because they used AI in the wrong way. And so how have you navigated that so that you're leveraging AI to find the patterns, to do the different things that it's really, really good at, while at the same time going, yeah, there's some stuff that we've got to still be in the loop on?
Well, so AI can do whatever you set it
Do.
out to do, and
Yeah.
largely it's just like, if there's a repetitive task that can be done, AI is great for doing that sort of thing. And in this case, the repetitive task is reading through company announcements and documents and news and identifying events that are meaningful to the
Okay.
company's story. That could be the launch of a new product, like an iPhone, or a new Cybertruck or whatever. Or it could be something more in the weeds, kind of financial, like the company just announced a new dividend program for the first time.
Okay.
And so what we do is sort of train the AI to go out looking for certain types of events that have been correlated to price movements.
Okay.
Strongly correlated to price movements. And we correlate them, and we prove that actually works before we even release it out to the wild. And
so your first step, before you get to it, because I want to walk through this, because I think it helps people understand, because actually the process you're describing is very similar to the process I encourage when I advise people who are trying to figure out how to leverage AI, where I'm like, you need to go through this process. Like, you can't just go, can't we just like API ChatGPT onto this thing? I'm like, no, or
right.
This thing won't work. Because really, even that first step you described was, you, with your experience and your expertise, knew what the right news sources were that you were training it on. Because obviously, if you just incorporated all that noise into it as well,
garbage in, garbage out,
it would come up with just a completely broken solution, because it'd be like, well, I'm just going off garbage. So you actually had filtered that down and go, we know the information that actually drives financial decisions and what actually affects stock prices and things like that. And the true source of that. Let's not include all the other trash. Is that a fair assessment?
Completely fair. And we did a combination of academic studies and our own studies to determine which events to focus on.
Okay. And so then it was that allowing it to actually then analyze. And did you use AI to identify those patterns, or was that in part, like, how did you end up after you got past that set of going, all right, we've got the right data set, now what?
Yeah, so there's two paths you can take. One is, and some of these things are largely have been studied for 50 or 60 years, and you can just go back into the record and pull up somebody's paper.
Yeah, you're not starting from ground zero all over.
Yeah, and if you get 200 papers proving it, you don't need to relitigate it. So
although in 2024, some people would be like, no, it's all wrong, I got to start over.
Yeah, exactly. It's alternative facts. So we would use some of those. For the ones that we kind of knew, or let's say anecdotally believed, that they would cause a significant share price move. We would then just put it into the system and then let the system build a analytics array automatically, right? So it goes out and finds that event like 300 times, pulls it back, looks at the price move, creates what we call win rate, which is basically the correlation coefficient. The win rate's above a certain percentage, we include it. And so if the win rate's like 90%, that means 90% of the time, this particular event moves the share price north or south, right? And once we see that, we're like, okay, so that's proven, right? And then we incorporate it, we allow it to kind of automate from there and just keep populating the system with more events as they break. And so, it's taking like a concrete example, for a company that starts a new dividend, they never had one before, it's usually a very positive event. And it usually moves the share price, several points, if not double-digit percentages in a day or a week time frame.
Yeah.
And so you add that, and then the system just goes out and looks for that type of announcement coming from a company as fast as it can, pulls it back, shows the data. And so as a user, you would then log into the system and see, okay, I have this dividend creation scenario. My win rate's 95%. My average move is 3% across all companies for one day. And it's like 7% over the course of,
So then an end user is now going into this and saying, these are the variables that I'm comfortable with, but basically establishing what they want. Is that what you're talking about?
As we're browsing, you're sort of looking at like each event is almost like its own strategy.
Okay.
So you could just invest solely on the basis of this event and do nothing else and not need to know anything else. You're just like, I know when this event happens, it drives the share price up. So I'm going to buy the stock on the news.
Okay.
And sell it 10 days later. I'm going to make 6% every time this happens. It can be that simple. It really is.
Yeah.
Or you could, if you have a little bit of market knowledge or want to play around, you can then say, well, does this affect large companies the same way it affects small companies? I wonder. So let me click the large cap button and see what the analytics say. And then on the system, it will go, oh, the win rate actually drops and the percentage return might drop. Okay, well, let me look at a small company. And then the opposite may happen where the win rate goes up and the percentage increase also goes up. And then you can do that if you want to look at industries and so forth. So it really kind of depends on how
far you want to go with it.
Yeah, how far you want to go into it. For somebody like me, like I'll go in and I say, I'm not going to invest in industrials. I'm not going to invest in utilities, but I'll look at tech and healthcare and financial services, companies that are medium and large and companies that are growing their earnings. And I'll create that as a search agent. Okay. And then forever it's going and looking for companies that follow
those opportunities.
Yeah. And it's going to bring it back to me. And it's just going to put it right in my inbox. I don't look at the app at all. I just look at the alerts that come in. I'm like, okay, yeah, it sounds like a good company. Let me take a closer look, or I might just buy on the alert. So trying to make it super easy. Unlike the surface level. And then for those.
It's just, so what's crazy about this is, and I'm curious the reaction from, because what's interesting is whenever I talk about some of this stuff, I see some of these changes because what you described, and to me, it's always fascinating. I'm doing some research on how they're discovering patterns in a specific kind of whale that they're able to detect now, how they communicate. And it's amazing how AI is really good at picking up on all these patterns that we maybe knew a little bit about, we had hunches on, which allowed us to then train the AI on it. And then we train the AI on it. And we're like, oh, hey, like now we actually can interpret these patterns that before would have taken thousands of years for us to sit and try and make sense of, type of a thing.
Right.
The challenge sometimes people run into is all of a sudden people who maybe relied on a certain set of skills that they had go, wait a minute, now anybody can do this. Like, what has been the response from, let's say, the big hedge funds that go, you've taken what we have privatized and kind of locked behind doors and have very highly paid people that do this, but you've now made this accessible to like anybody. And in fact, what you're doing is actually superior to what we're doing, because we still have 200 traders sitting on the floor reading a Bloomberg terminal. And you literally have created something that can email somebody and go, hey, based on those things, buy this right now. And boom. And it works with the same level of effectiveness. That kind of change isn't always met with like, this is good for everyone type of a thing.
Yeah, they have not been too happy.
I would imagine not.
So, a couple stories. One is we're a startup, tech startup, so we're always raising money. So if anyone's listening, we'll take your check. So we were trying to raise money with this VC firm. We were pretty far along. The people we were talking to loved the idea. They loved the concept. They brought it to their investment committee, which is the ultimate like decision makers. It was just a yes or no. And they said, love the business, love the founders behind it. Unfortunately, this venture capital firm was actually created by a hedge fund. And so buried in their bylaws was they could not invest in anything that could be competitive against the hedge fund. So we were not getting their money. And it was sort of like, we went through this long process only to arrive at, sorry, you might screw up our returns. We can't invest in you. And it just felt very, very un-American, very controlled situation. So that was one story. In another case, we were talking to a portfolio manager. He managed about $1 billion for a large hedge fund that I don't know how many billions they have, but it was many. And he said, yeah, we try to do some of this stuff on our own. We have all these quants that are kind of gathered in a room that I don't talk to, and many of them don't speak English. And I just need something easy to use. And so if you guys are able to like just give me all the trades, with all your methodologies, I'll do the trading and I'll just give you, 20% of my profit.
Okay.
And I was like, so you want all the methodology, the technology, and how is this going to be in a contract? I didn't buy it. I just felt like, just show me all your good stuff and how you make Coca-Cola, and then we'll talk. I'm like, no, you're not getting the secret recipe for Coke. Sorry.
Well, and it's one of those things, the story you described and the story you're on and the technology you've created, I think illustrates some of the kinds of transformative changes that we're seeing. I talked to a lot of healthcare tech companies that similar type things where it's like this technology is going to fundamentally disrupt how it's been in the past, and change people often do not respond well to, especially large institutions who have built their entire economy around this is how we've always done it. And then someone comes along and goes, yeah, but we could do the same thing and we could do it this other way that completely disrupts it. And there can be a pretty heavy gravitational force with that. And it's been very interesting from the landscape that I sit in to watch some of these things happen and watch where, in the early days, people kicking out. And an example of this, I was commented on it last week. The music industry is dealing with this with AI because of some of these AI companies. It reminds me back to Napster in the early 2000s. It was like, oh, it's going to destroy the world. And, the big industries had fought and kicked and screamed and tried to shut it down. And it was like, well, it's not going anywhere. And eventually they had to go, well, we're just going to have to figure out how we work in this new world.
Mm-hmm.
And it led to, streaming services and Pandora and Spotify and things like that when they finally went, I don't think just trying to force people into the way it is, but you're kind of right in the middle of that really rocky journey where it's like, it's not there yet, but the capability's there. And so now you're right in the heart of the change curve.
Oh, and we get beat up all the time on some of the forums by some of these, finance folks who are like, oh, if they really had something, they would create a multi-billion-dollar hedge fund. They wouldn't be giving it away for, a couple $100 a year. And it kind of saddens me, that you can't possibly have two goals in running a business, like one to actually create something for society and two to make money. Like you can only have one. And it just, if you read through some of these threads, you can go on Reddit and kind of read it for yourself. And you're like, well, it's not that goal. Like we wanted to create like a Bloomberg terminal for retail investors that was simple to use. We didn't want to become, a multi-billion-dollar hedge fund doing this ourselves. Like we're not that type. But it was but a lot of people were disbelief by it. Others were pissed off, the fact that it existed, and you can kind of tell they were from financial jobs based
For
upon
sure. Well,
the
and I
jargon.
think this is some of the tension that I see where to me, it's a mindset shift where if you have a scarcity mindset, this kind of stuff can just scare the living snot out of you, because
Right.
if you've built your whole career on my secret knowledge and what I know how to do and the $30,000 terminal I have access to that you don't, and that's how I've made my gains, and the thought of the average person having access to that can create this feeling of, well, if you have access, then that takes
Mm-hmm.
from my access, when in fact it's like, no, it just means they can do it too. And it, like we said, you invest in companies who would have maybe not caught the attention of people before, which grows the economy, which improves things overall. When you raise the tide, everybody goes up, but it's a
Right.
hard shift when you have a mentality of haves, have nots type of thing.
It is exactly right, and they did a good job with this in Moneyball. Right, it was the same concept in baseball, so taking statistics and then taking the jobs away from the recruiters, and then
Yeah.
they felt threatened by this new approach because their livelihoods were threatened, and then they attack whoever is behind that. And so we see that, and it's always going to be the case. I think it will continue to be the case until really the senior leadership just says, "Shut up! This is how we're going to do it."
Right. Right. And I think that's where we have, but I think it highlights one of the twofold problems we have right now, or challenges we have. It's just the reality of things. But yeah, there's kind of the old guard that's holding firm to how things have been done. And there are people who have benefited from the old way things have always been done. And so the thought of this kind of disruption can be very concerning. And I talk to people on a daily basis who think, hey, this AI thing's going to rob me of my job. And I can see brokers going, well, if Andrew's successful with this, nobody's going to want, my hedge fund's going to get rid of all of us, and we're going to whatever. And it's like, no, they're not. I mean, they will if you go, I'm committed to doing things the way I've always been doing. But I listen to your story and think, I don't understand how every hedge fund on the planet wouldn't go, hey, how do we work with you and help you be successful? I mean, go ahead, help other people, make it accessible to them too. But why don't we do it too as well? Because like I said, man, the job you described for one of the folks on Wall Street at a Bloomberg terminal, I don't care to go to Stanford or Harvard and end up on Wall Street, and that's what you're doing all day long. That sounds like a pretty miserable existence. So I would think, boy, what you just described sounds like a heck of a lot better job, more interesting. Because even what you described in terms of the job of, now those alerts come to you, but now you can think critically about, well, what if I did this? Or what if I looked specifically at this sector? Or what if we formatted it this way, or positioned it this, or looked for this unique thing we haven't really prioritized in the past? That's the interesting, exciting stuff that you go, wow, that would be an exciting day at work versus listening to tweets read at me.
Yeah, you do the tasks that have value add for a human brain instead of the ones that can be automated. And that's what I think we're gonna, over the next 10 years, what I expect to see is a little bit of revenue growth from a lot of companies and huge earnings growth from a lot of companies that are transforming internally kind of the guts of the organization away from a human. Let's take the insurance business, because I think this is going to be one of the biggest industries to get disrupted by AI. You have somebody who's a claims processor. You have thousands, tens of thousands of these claims processor, right? So you go to the doctor, and eventually the doctor sends a bill, and they have to look at it and kind of deny as much as they can, so they don't have to pay for it, and then reclassify things and submit it back. And you get that weird bill that you don't understand, but says you owe, $195 at the end of it. And you're like, okay, somebody did that, right? And they're doing it every time you go to the doctor's office, every time you go to the hospital.
Yep.
Like times 300 million people. And then however many times you go to the doctor per year. So let's say it's 5-6 times. That's an insane amount of human processing of like information and codes and payments that could be completely automated. And AI can do all of that. So then
Yeah.
what does the insurance industry look like after that? When they can start to say, you know what, we can actually afford to pay more on some of these claims because we're paying less in salaries for people who are trying to deny claims. Then the insurance business becomes more profitable and hopefully allows for, greater payments.
Right.
And I
Or
forget.
even in that example, because I think sometimes people freak out when they're like, "Oh, we'll have less people, they'll pay less." That's the solution. And I actually advise a lot of senior executives on the fact that it's not necessarily even saying, "Well, now we don't need these people anymore." Sometimes it's like the claims processor going, why how about the claims people now spend their time focusing on, "Hey, are there certain things that we could be encouraging people to do that actually reduce the overall amount of claims, because we can take the time to look at patterns of, whoa, people who have this series of claims typically go in this way, and we could mitigate that if we did and improve healthcare as a whole." And I think it's one of
Right.
those, I see a lot of people going, "I'm scared the robots are coming for our jobs." And I'm like, in the modern world, most people's jobs, you've become a robot
Yeah.
in your job, and the robots might just be coming to go, "Can we just have our stuff back so we can actually do something better with it?"
Yeah. Or you take that 40-hour work week that has really turned into a 55, 60-hour work week in most
And bring it back
places,
to 40.
bring it back to 40 or 35,
Right.
and get
Yeah,
3 times.
it's actually amazing when you think about it. When the 40-hour work week was started, it was back at a time where people were looking ahead going, "Oh, with all this automation, with all these things, 100 years from now, we're probably only going to be working 10 or 20 hours because we're going to be so efficient." And you look at it now and you're like, people are working more than they've ever worked. They're more stressed out than they've ever been. The kind of work they're doing is reading Bloomberg terminals or reading through claims going, stamp, stamp. And you're like, I actually see so much potential for this to make work better and more efficient for us as
100%,
people.
100% true. And you can allocate to higher order thinking and improving processes, to your point. And going back to the insurance example, like there are certain hospitals, and I used to study this. I was at Georgetown for a while as a professor, and we used to study some of these health outcomes from electronic health records in bulk. And so one of the things that you saw was how many times a person was readmitted to a hospital for the same problem. And you would see these problematic areas nationally where, so in certain hospitals, they would go back 2 or 3 times for the same type of infection that they
Yep.
got over and over
Yeah.
and over again. And a lot of times the infection actually happened in the hospital. And then the system rewards the hospital by paying them 3 times to effectively screw it up two
Yep.
other times. They're getting three
Yeah.
times the money to screw it up. Now, if you had somebody's job, instead of processing these claims, be focused on, you know what, we're actually going to lower our payment rates for hospitals that have a high readmittance for the same
Right.
problems.
Because
Like,
we now actually have the time to identify that stuff and
right.
see it. And so now we're actually going to incentivize the right kind of outcomes.
Right. And then the hospital all of a sudden say, wait, why aren't we making as much money as we used to? Oh, because you keep sending sick people out back and they keep coming back. We're not going to reward
Instead
you
of
for that.
actually making them healthy.
Right.
Yep.
So fix your problem, make sure the nurses check their central lines and nobody gets an infection, and you'll get paid your full rack rate again. And
Yeah.
that improves healthcare for everybody. So, I think that there's a lot that can be done by reallocating those type of hours that we're all
Yeah.
doing that are kind of mindless. And, the other analogy I've given is like we had a roof put on our house last summer, and I watched them go up on the roof, and they had took down the shingles in like half a day, and in another half day they had redone the entire roof. They had,
Yep.
6, 7 people up there, and the way that they were doing it was with a nail gun, and you just heard all day long like bam, 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 because they're just.
Yeah.
And so I'm looking at that going, oh, okay, this is a really good example for AI. AI is the nail gun when before we had just a hammer. Right? It doesn't mean you need fewer people. It means you can do 6 houses a week instead of one house a week.
Right.
and they're not going to fire people. They're just, especially for smaller companies, you're going to be able to do a lot more in revenue. I think the big companies will be more about productivity and
Yep.
earnings, but the smaller companies can actually, rapidly expand their revenue
Yeah.
by being able to do more.
Yeah. And again, it has a net positive effect, because even using that roofing example, for everybody involved, because if you can get 6 houses now done in the time it took you to do one, the cost of redoing your roof can be more in line, make it more affordable, which brings insurance rates down, because now instead of insurance companies going, well, everybody waits to get their roof redone until there's a hailstorm. And so we just have to build bloat into our insurance rates because we know this is coming for us one way or the other. The whole system can correct if we have the right kind of mindset. And so this was so, first of all, one, thank you so much for sharing your journey through it, because I not only think it was super cool to hear it, but I think it's also a reflection on, there's so many transferable lessons that I think anybody walking away could take from this and go, oh, okay, I'm seeing the trajectory of how this stuff applies. And yes, in your journey, it was applying it to financial transactions and trades, but really this applies much broader. And I love the fact we ended on the fact that, yeah, you could look at this and go, this is the end of the world for hedge funds and big stock traders. Well, I guess that could be one set of noise narrative that could come out of it. Or you could actually look at the core of it and go, this actually could make it better for all parties involved, and everyone wins.
That's how I look at it. I think it's just a matter of productivity and where you want to spend your time. And if you want to do stuff on a spreadsheet, or if you want it automated through AI, like we do with LevelFields, where
Well, I think of the roofing analogy. I'm sure there was someone at some point when nail guns came out went, this is the end of it for me. I'm the nail guy who nails in the roofs, and now people are up here just nailing nails, and I was the best nailer that ever existed. It was like,
and
more houses.
To that example, there's an AI company that I actually invested in. It's a startup. They do automated drywall and painting using robots.
Okay.
And there's multiple reasons why they do that. Obviously, robots don't call in sick from a hangover, and they don't sue you. So the things you can do with robots that you can't do with humans. But ultimately, the people who are sort of now supervising them, that used to do all the drywall work, they used to do all the painting, are actually happier because they don't have these repetitive stress injuries on their bones and their bodies.
Yep.
They're still there to supervise. They can do a lot more, and kind of point the robots at these areas, and they're going home and they're not hurting and they're not sore.
Yeah, from lifting drywall over their head all day long.
Right. And it's not exactly exciting work to keep doing the same thing over and over and over again. So
I
think that's another example of how we
we could, like I said, we could probably go all day long with the number of times I've interacted with people about re-engineering jobs and going, this is coming, right? Just like what you described, what you're doing in it's coming for the finance industry. It's here. So you can either sit there and go, la, 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 like, I don't want to, whatever. You can try and squelch it. But either way, it's coming. And I think there's a unique opportunity to re-engineer it. And I love your mission. I love what you're doing. And the fact that your company name says it all is perfect. So
I appreciate
thank you. Thank you so much, Andrew, for joining me. And I hope everybody who watches and listens to this, not only, hey, if you're not in the trading business, who says you can't start, but also helps you think a little bit differently about the tech and what it means and the broader implications it has. So thank you, Andrew.
No, thanks for having me. Appreciate it. Nice talking.
All right. Well, everybody, we will see you on the other side.